Hey guys, what's going on? Welcome into the video. So we have one of the most important weeks up ahead for the stock market, and that is with the CPI and FOMC major catalysts coming up back to back. In this video, we're going to be going through what to expect from those catalysts, different tradable scenarios, and what to look out for this coming week. So getting into it first, on the morning of the 13th, which is Tuesday of this week, we have the CPI data release. This is the most important catalyst of the week and will have a high likelihood of dictating what the stock market does into the end of the year. Currently, the consensus estimate is coming in at 7.27% year over year and 0.37% month over month. So to keep it simple, any number that comes in above 7.3% year over year and above 0.4% month over month will be bearish for stocks, and anything that comes in below 7.3 and 0.4% will be bullish for stocks. And then the day after that, on Wednesday, the 14th, we have the FOMC meeting, which includes the Fed's rate hike decision first at 2 p.m. Eastern Time, and then Powell's speech 30 minutes after that. So right now, the market is pricing in a 77% chance for a 50 basis point hike and a 23% chance for a 75 basis point hike. Important to note that the Fed has telegraphed a 50 basis point hike many times in their recent speeches and likes to go with what the market is already expecting, so that should be the overwhelming expectation from us as long as there aren't any big surprises from the CPI data release. But overall, the CPI data release is the most important catalyst this week, as it will likely dictate Powell's tone during his FOMC speech as well. If CPI comes in higher than expected, expect Powell to speak more hawkish, aka bearish for the market, and if it comes in lower than expected, expect Powell to speak more dovish, aka bullish for stocks. Alright, so now taking a look at the S&P futures chart, which lays out the technical setup of the market best right now. We're in a very interesting spot going into these events. So this past week, the market broke down from this 2-month-long plus rising wedge pattern, and this is very important because of how long this channel was respected for and the fact that it held and bounced off the support 7 different times. Now this is a substantial break, but breaking down before the major catalysts ahead does put this at risk of turning into a false breakdown. I was personally hoping that it stayed within the channel into the CPI catalyst because that would set it up for a major sell the news event and essentially be a major breakdown waiting to happen, but it is now more in a neutral spot ahead of the catalyst, as it could turn into either a buy the news event or sell the news event. It's just going to come down to what the data comes in as. A shorter term bearish setup we can see here also is a head and shoulders pattern formed. If this plays out, it'll look something like this. But once again, if it does break down ahead of a major catalyst, that makes it a high risk chance to turn into a false breakdown or not play out at all. We're going to be going over a bunch of different tradable scenarios that could play out along with this in a little bit. Now zooming out, these two patterns are the most important patterns to the stock market right now. So this past week, the S&P broke down from the rising wedge and uptrend line after rejecting off the long-term trendline resistance. So those red trend lines have rejected each time when touched during this downtrend and started the next leg down each time. So now the question is, do they just reject it here and make it easy once again this time around? And that is what I'm personally hesitant of right now. We will see how it plays out in the week ahead. As long as the S&P futures chart holds above 39.12, this can technically be looked at as a healthy basing or consolidation pattern right before the major trend line, and you could even look at it as a bull flag here. There's obviously a huge bearish factor along with that recent uptrend breakdown, but overall the market is in a pretty neutral spot going into these catalysts. So I was talking about last week that if price stayed within the uptrend channel, I'd have a heavy bearish lean going into the catalysts this week, but now overall I'm more on the neutral side on the short term just because it broke down before these events. The thing that has kept me on the right side going into the heavy majority of news and catalyst trades is reading into what the market could be pricing in. Now, if the S&P is going up and overbought into a major catalyst, my lean is always to expect to sell the news event due to the fact that the market has already priced in positive news, and if the S&P is dropping and oversold going into a major catalyst, my lean is always bullish and expecting a buy the news event due to the market likely already pricing in negative news or negative data. Where we're at right now is a pretty neutral spot currently on these indicators, so I have a much more even lean in the short term and would not be surprised with a reaction to either side. Once again, it's all going to come down to the data this time around. So now decision time comes next. Is the market going to break down below 39.12 and trigger downside, or bounce strong from here to retest the core downtrend line, which can potentially trigger a major breakout above. The key levels that I am watching are at 39.12, in which triggers downside below there, and would also trigger that head and shoulders pattern breakdown, and then 3997.5 to 4000, in which triggers an upside move above there. I have 3997.5 as the exact key level, but many use that 4000 level as well for that psychological factor, but this can be used as essentially the same levels. Alright, so now let's run through a few tradable scenarios that we could see play out from CPI in the week ahead. So the first scenario that we could see is some panic selling on Monday ahead of the events, which triggers the head and shoulders breakdown and sends it down to around 38.70 before CPI Tuesday morning. Doing this would result in price being oversold ahead of the event and going into it, and if CPI comes in lower than expected, that sets up a big false breakdown setup, and which would trigger back above 39.12, likely send it to around 4,000 next, and if it breaks above there, it has a major test of resistance above at 40.60 to 40.80-ish, which lines up with that white uptrend backtest line along with the core downtrend line. This would also set up a possible breakout to a new swing high if the FOMC meeting is bullish in the day following. The next possible scenario could be something like this. Let's say we get a sideways consolidation day on Monday, which sets up a neutral stage for a big move on Tuesday. So if CPI comes in higher than expected, I'd expect a substantial downside move then. 38.70 likely comes first, and if the number is around 0.2% or higher than expectations, this could easily get down to the 37.50 to 37.70 demand zone on the downside. This is a major support zone and is where last month's CPI move triggered from. Now, if CPI comes in lower than expected, expect a strong move to the upside. That 4,000 area would come first, and if that breaks this, then it has upside up to 40.60 to 40.80 zone above there. This would be once again that spot where the major resistance cluster coincides and the upside target if CPI comes in lower than expectations, and it could take a number that is 0.2% or more below expectations to get a move all the way up to that range. And now a couple more complex possible scenarios. So something like this could play out where CPI comes in at or just slightly below expectations, has a strong bullish reaction, and reaches around that key resistance zone above. Now let's say though that this number does not please Powell enough, and the Fed's message is something like inflation is taking too long to come down, we will stay the course, we will stay restrictive for quite some time. In this scenario, it would likely result in a violent sell back down and reverse all the CPI gains and likely much more than that in the future. And now let's say CPI comes in at or slightly above expectations, and the reaction is a strong initial sell. This could result in a breakdown of those above supports and make it move down to that 37.50 to 37.70 key zone. But then let's say Wednesday on this FOMC meeting that the Fed is more pleased than expected with the CPI print and are optimistic at the meeting, saying something like inflation is making good progress and we plan to slow the rate hike pace into 2023. That could start a major bounce, major false breakdown setup as well, and send it back up towards that 4,000 plus resistance area. Now these scenarios would make quite an interesting trap from CPI, but I do think something like those initial scenarios have a much higher odds of playing out, just because the Fed is unlikely to be on a different side of what CPI comes in at. If it comes in higher than expectations, the Fed will likely be hawkish, and if below, the Fed will likely be dovish, but it's always good to exercise these different possibilities, like these scenarios, just so you're prepared for any type of tradable move from the market and have an open mind to all. So that is everything that I'm watching for this week from those major catalysts, CPI and FOMC meetings, back to back, maybe the most important week of the year, and will dictate whether we get that end of year rally or we dump in the end of the year like we saw last year. Those are the key levels and scenarios that I'm watching for on the S&P as well. Essentially, if the S&P is breaking out, trades will work on individual stocks, and you can trade from there. If the S&P is breaking down, breaking supports, there's likely going to be bearish setups. You can trade in individual stocks, or just know to be heavy in cash and on the sideline and wait for better opportunities when the major indexes do look better, because essentially what the indexes are doing, the individual stocks will follow. So hope you all enjoyed it. Hope I've provided some value to you in this video. If so, make sure the like button and subscribe button helps me out a lot, and I would greatly appreciate it. For anybody interested in getting my nightly watch lists and personal trade alerts, that is the first link down in the description below. Good luck trading to everybody this week, and I will catch you all next time. Peace out.